All right, let's get the microphone test out of the way here before we get started. Let me know if you can hear me across the various chats. We have YouTube, Twitch, and X public streaming right now. We do have a few private streams going as well for those that cannot access those websites due to location. Yeah, let me know if you can hear me okay. We're going to get started and have a conversation about Bitcoin's price action, and then we're going to talk a little bit about Marathon Digital's Slipsteam service. So go ahead and chime in. We'll be back in just a minute to get started. All right, let's go ahead and get the music under control here. Thank you for letting me know that you can hear me on some of the streams here. Haven't gotten confirmation back from anybody on YouTube just yet, but I did check myself and it did seem like the microphone was okay. So we're going to go ahead and bring the music down and then we're going to get rolling. Let me get that paused on my side here. Hello and welcome to Landy's Crypto Corner. Today is February 23rd, 2024, and we're going to talk a little bit about Bitcoin's price action today, and then we're going to talk a little bit about the Slipstream controversy that is seeming to hit the crypto Twitter or crypto X space pretty hard right now. And I'll review a little bit about what I understand about the service and some of what I know in terms of what they're doing in terms of their internal mempool and broadcasting and stuff like that. I do have a little bit of information that was not even included in some of what Portland was talking about on the most recent Marathon Digital Live or Spaces. It was a live Spaces. It is recorded. You can go listen to that. I believe Bitcoin Magazine is the one that hosted it. But let's go ahead and take a look at Bitcoin here. We're on the daily. Let's go over to the support and resistance chart and see that Bitcoin, we can see rather that Bitcoin is hanging out in the weekly zone here. So nothing unexpected so far here. As long as Bitcoin is trading and closing candles above 50,800, I'm not looking for too much further downside. And with the spread on the Bollinger Bands right now, as we do see BBWP cooling down as the basis is rising towards this particular consolidation, it does become a logical area for Bitcoin to test to the downside should Bitcoin start to lose this 50,800 weekly. Now, the basis is currently coming in at just around $49,000. I do expect it to be quite a bit closer after close today, as that basis is catching up pretty quickly here during this consolidation. Now, the wick high here from the deviation of the tighter range over here from early to late December is coming in at 49,100. I do expect the basis to be above there and somewhere around this order block candle. Now, we can also see that Bitcoin is above this bear market swing high from March of 2022 at 48,230 or 240, and the basis now coming into that area kind of gives us a range if this order block is taken out on a close open. So if we do see a bearish reclaim of about 49,940 or so in the lower term time frames, excuse me, to around 49,725 then I would be looking for this wick to get tested around the basis at $49,000. Sorry, having a little bit of trouble speaking so far in this early going. Hopefully that doesn't continue. From there, we kind of give it some room down to that bear market monthly swing high, which is the wick low of this order block candle here, coming in just above there at around 48,330 to basically the bear market monthly swing high. Just below there, we have the close opens of that particular high coming in at around $47,000. So, we kind of have easy to understand areas of support down below. If we did see 47,000, rejected in terms of being an area that holds as support, so bears can't push through that monthly, then I would be looking for a reclaim of this monthly on the basis next if price did start to lose. Of course, this is all conditional based on price losing the weekly, and of course the wick lows here, which are coming in just above 50,500 or so, coming in at 50,630 or so. Below there, then we can start looking at that order block area. 50K on the wicks, 50,500 to around basically 50,000, and then below there, basically 49.5 to that bear market swing high at 48,240. Below there, then we can start looking over here at the monthly, where we did see the prior close opens of that deviation come in just below at $47,000. If we did see a bearish reclaim of that area, I do want to call your attention to the lower first standard deviation of volatility on the bands here, which is now lining up with that low side monthly close open there at 45.5. Very nice indeed. We can see that another very good thing is happening here with the bands. And that is that the lower second is now in the weekly zone down here, where the origination of this impulsive move to the upside occurred. So that was on the spike down to that 41,850 weekly support area after losing and deviating down to the monthly there at 38.5. So pretty simple, easy to understand stuff going on here. Now, if Bitcoin does regain the topside weekly here at 51.8, so we got the range between the two weeklies at 50,800 basically to around 51,800. Now, if Bitcoin can reclaim that, I would look for a test of the upper first here, coming in at around 52,400 to 500. Above there, I'm looking right back to the wick high area around the September of 2021 weekly swing high. That was the first real big swing high coming off of the reaccumulation lows before putting in the all-time high. And that's coming in at around 52,950 to that wick high now at $53,000. If Bitcoin does trade and close any kind of a daily candle above there, that will make the upper second standard deviation in the mid $50,000 region available as potential upside price action zones of interest at around $55,000 to $56,000. Of course, if we did see price get above there, we can see that the upper third is in the next zone to the upside here. I wouldn't necessarily be looking at this as an area of interest until we see compression to re-expansion. Although we have seen Bitcoin and many other assets when looking at volatility bands here, or the volatility of the Bollinger Bands in terms of levels, spike into the upper second, upper third zone. And this is coming in right around that monthly up there at 58.8. So essentially anywhere above the mid $50,000 region, probably going to encounter heavy resistance if Bitcoin were to initiate a move like that. And, I would look initially for wicks coming in the upper 50 to low $60,000 region, where we see the next monthly above it coming in at 61,350. Now, it's all conditional. So if we did see Bitcoin closing back above the upper second standard deviation, I would keep an eye on BBWP. Now, of course, this would all be contingent on it first closing above all of the overhead resistance here of the local dailies, the weekly here, which is historical, the upper first, which is volatility based, the September 21 weekly swing high. Then we can start looking for the local high and higher up to that range. But the reason why I would say keep a close eye on BBWP is because if price started to head that way before a compression to re-expansion, we need to pay attention to if volatility gets above the moving average, but does not turn the moving average up. That would be more indicative of local lower term time frame, maybe even daily rejections in those areas, and then we come back to it later to reassess compression to re-expansion of the bands. In this case, it's looking as though Bitcoin wants to continue its compression phase for price volatility relative to the bands. So we see price volatility and mean reversion, and this is borne upon by the basis catching up to price action here as it consolidates. Now, the next step that we want to see is a nice pinch in on the Bollinger Band. So we do see a bit of compression as the lower bands start to race up towards price action here, and we see a flattening in the upper bands. So what this is telling me is that we're likely going to see a compression phase first on the daily, then to re-expansion. So we can get high volatility within the context of the volatility levels or standard deviations of the bands, but for a real sustainable leg, we're looking for at minimum a little bit of compression, some BBWP price mean reversion here in this case. Even if it just sticks in the local range, dips down a little bit, forms a new higher low structure. This does look like a nice, this is a nice compression of price volatility relative to the bands right below resistance. So, and it's currently holding support. So if things did start to head to the downside, I'm not necessarily looking for this giant move down that many are. There's a lot in the TA crypto community, many who have little to no traditional market experience in terms of professional trading experience, are very, very adamant that this is going to drop like a rock. It's going to take everybody out. It's going to wipe all the OI, and it's just going to absolutely wreck all the plebs. Well, I'm not of that opinion. I actually think that if this thing does head down, start to break down from the weekly, I think it's going to be a fairly structured drawdown, and maybe I get proven wrong, but to really kind of help you understand my take on that is very large price movements can occur when volatility remains high, or at least the Bollinger Band spread is this high or wide, I should say. So in this case, it can come all the way down to the lower first into the monthly at 45.5, and you're likely to see, many people start screaming that it's all over and setting their feeds on fire with told you so's and all that kind of stuff. But really, it does nothing. The only real issue that would occur for price action, or from the price action perspective, would be closures below the lower second from here, meaning closing below the lower second, taking out this last consolidation wick low, and then we're looking at bounces probably getting sold into, and then long form consolidation with sideways and down trend forming. In this case, this is still in a very healthy uptrend. As you can see, after the deviation lows, broke trend, higher load its way out of this consolidation to higher highs, and then right back into consolidation. We haven't even really seen a big 3 candle, 4 candle, 5 candle closing low structure. We've seen swing lows, so swing high to swing low over here, swing high to swing low in this range here, another swing higher high to a swing lower low. It's consolidation. That's all it is. So I think there's a lot being made of very little at this point. Of course, we have to see what conditions are met in terms of price closures to the upside and downside. Now, when looking at something like a Stoke, this is a regular Stoke, which is measuring close over close price action, not the velocity of RSI. When we look at the pivot here, we can see that it is at 52,469. Nice. So basically 52.5 would turn this back up in the context of the overbought zone, which is where we see the biggest moves in the overbought and oversold zones. And, realistically, this could fall quite aggressively and still be very bullish in terms of its read. It's in the strong half. It's above the 60 read, which would be considered, if you're looking at basically any indicator, 60 to 62 is going to be the edge of your bullish control zone. So, which means that it's bullish. it's when it starts to lose those areas, enter the bearish control zone. You're already have seen, trend form in a bearish direction in many cases, and then you are looking for follow through with downside targets in that case. But this can very easily bullish reset within the overbought or bullish control zone, or even the strong half of the Stoke here. Again, this is a regular Stoke, not a Stoke RSI. So this is measuring close over close price momentum. And it's natural to see it turning in the context that it is because of the lower low closes. It is not measuring velocity of RSI or speed of RSI in this case. So I will now jump over and we're going to take a look at what I'm very interested in, and that is the compression happening on the 12-hour, because this is going to very likely inform what is coming next on the daily. And we can see a very tight compression of the Bollinger Bands on the 12-hour. So we're getting very, very clear indications of possible expansion down into support, or in this case, at least initial lower term time frame rejections to the upside. Likely, if we did see price close above the upper second, for instance, and take out the highs, then we're looking for re-expansion of the Bollinger Bands and re-expansion of BBWP in that context as well. That was not the right tool that I was looking for there. So in this case, if we did see closures below the lower second standard deviation on the 12-hour, which is coming in at 50,964 currently. Well, what are we looking for? We're looking for expansion of the Bollinger Bands, but Bitcoin has to meet a few additional criteria. It's got to take out the lows on a close, which it's pretty much at equal lows here at around that 50,640, 650 area. So it needs to get a close below the lower second that also takes out the current lows. Then we're looking down to the next 12-hour support structure, and that's actually this high on a close over here, or swing, I should say. It didn't quite close on a closing high, but then we're looking down just a little bit further to the mid 50,000 to 50,400 region, and then the close opens there at $50,000. If that is taken out, then we're looking for continued volatility expansion of BBWP and the Bollinger Bands to further downside support areas somewhere around $48,500 to $49,000. Again, this is just local structure from this current uptrend, but then there's the wick over here. There's the closes over here, which is actually would only be valid if we saw 47.7 or so lost on a 12-hour close. Then we'd be looking for further continuation, and that of course bleeds over into the daily and higher term timeframes, right? So very, very easy. I would expect this can very easily get local downside consolidation deviations into support on expansion, and then just rocket itself the other way as well. So be aware of that. That's kind of the structure that it's currently painting. You're seeing probably a lot of people talking about rollovers. I'm not necessarily looking for that. I'd be looking for more of a structured drawdown into support on expansion. There's a lot of support below, and high volume support at that. All right, now on the other side of that, if Bitcoin can regain the lower first and basis, that's coming in at 51,380, 51.4 to the basis here, which is at 51.8. Now, again, the 51.8 is the weekly here. So on the major support and resistance for the daily and weekly that Bitcoin has been playing in is this 51.8 level down to 50,800. So in the context of the 12-hour, if that upper first is taken, that's also that historical weekly close open that has provided support and so far until yesterday's closure. If that is regained, then we're looking for the upper second to get ran around the current high side structure in the mid $52,000 region. This is currently coming in at 52,650. I would expect this to compress further if or flatten out around that area, around 52.5 to 52,650 or so. If Bitcoin were to start closing above there, it has to meet an additional piece of criteria, and that would be closing above the $53,000 high. Then we're looking for valid expansion of the upper second standard deviation, BBWP, on a break of resistance and then we're looking to that mid $50,000 region. So I wanted to get through and explain why I am watching the 12-hour, because it's going to give us pretty clear indication based on what develops on the next few 12-hour candles on what's going to happen on the daily, for either further mean reversion back to the downside to some of those supports, maybe even the basis band on the daily there at 49K and lower. Or if it's going to just kind of deviate, go sideways, and keep bouncing off of downside supports, grabbing liquidity, and then eventually round it to the top side and take out the top side and start expansion that way. We can get an edge on this by looking at the 4-hour as it relates to the 12-hour, so 4 and 6-hour. You can see sideways consolidation with slightly widening ranges. We can see that this is just kind of expanded down to and through the lower second standard deviation here, slammed into the lows, popped up back to the basis, and it's been failing the basis band on the 4-hour ever since. So, we have a 4-hour downtrend, but there is the potential right now after, getting that lower second standard deviation expansion that kind of widened the bands ever so slightly here. We have seen a spike into the lower second at that 50,600 to 700 area, and it has the potential to try to higher low its way out of here. So higher low in the context of this would be closing back above around 51,300. Of course, we would want to see then it take out at minimum the close structure over here at 51,800 and 900, and then take out that current wick high at $52,000. Then we're looking at this as being a higher low structure to trend break and then trying to form a new trend to the upside. If we do start to see lower second standard deviation closures, price closing below there, it's likely going to be taking out its current lows. And then, of course, we're looking for some kind of a drawdown into the mid to low $50,000 region. And then, of course, from there, likely the basis on the daily, wherever that ends up, either 49K right now, or possibly lower if it does deviate below that basis band on the daily. It's 49.5 is probably where the daily basis band is going to update to at close today if Bitcoin doesn't race towards it first somehow. I'm not necessarily looking for that to happen, though. We are seeing the potential for Stoke to turn here. We're not really seeing too many bullish divergences right now. There are historical hidden bull divs. They're not going to populate on most indicators, but I don't think they're as powerful. If anything, they're enough to keep it from that type of a read or perspective in range for the moment until it breaks down. So it's not very relevant at the moment. But any 4-hour closure here in the next 40 minutes or so above 51,117. Currently trading slightly above there. Maybe we'll monitor this if I'm still streaming at that point, and see where it comes in at. But at that, what we're essentially looking for is a possible Stoke turn or momentum shift to the upside, where we are getting, some choppy closes here that could start to turn things around, especially if we see a close above the open of the prior 4-hour candle, which is at 51,200. Then we're likely going to see Stoke turn, at least initially, and then we can extrapolate out its veracity or how much does it really have in terms of momentum going for it, at least in this case, as it relates to some of the lower term timeframes like the hourly, let's say. Hourly looks like it's trying to bottom out, squeeze. Now the hourly, as it relates to the 4-hour, is pretty clear. It's back above the basis. If it can close here with this next 4-hour candle, we're likely targeting that 51.2 to 51.250, maybe even 51.3, which would take out this low side or set the lows of this particular hourly consolidation and likely set a higher low in the 4-hour. Now that's still just in the context of consolidation. It needs to go and take out that last lower high in the 4-hour to get a trend break, and then try to, of course, set another higher low to change that trend to an uptrend. In this case, if we do start to see the hourly start closing back above the upper second, somewhere around that 51,350 to 51,375, Then, it's past most of the lows here, the most recent ones, probably looking up towards around 51,500 for a test. And then maybe even 51.8 at the weekly to that wick high that I said really needs to be closed above on the 4 hour to get things rolling back to the upside. And that's around $52,000. So that's this high up here on the hourly. Then we could start looking at the strong half of the range, deeper 52s, maybe even a run to that wick at 53 and higher. Of course, if the hourly starts to fall back below the lower second on closes, that would actually be, no, it wouldn't be the lowest close on the hourly here, but it would be right around it if it does close below it there at around that 50,006 or 50,861 rather, to 50,600. Then we're looking for expansion back to the wicks. If the wicks break down, then we're of course looking to the structures over here around the mid 50s to low 50s, and then just 49.5 to 49k at the wick there, right around where the daily basis band is coming in. From there, you just take it one little level at a time. If it starts to drop that, you're looking into the mid 48s down to that bear market swing high at 48,240. Gets below there, probably in a range between there and that monthly support around 47k, which I want to call your attention to all of these tests of monthly supports. So again, I know that some of you have seen this a million times, but for those of you that haven't, Bitcoin has been playing very nicely. I'm just going to show you a few examples. Daily rejects the monthly weekly zone, regains it, sits around it, heads up to the next weekly. What does it do? Mean revert right back to the to the weekly and monthly zone. Comes up and tests the next monthly, rejects, comes down into weekly liquidity areas, tests that monthly a few more times at 38,500, moves on to the weekly for a direct test at 39k, moves back on, tests around these weeklies here at that 41.8 to 43.2 level, gets front ran at the next monthly at 45.5, comes down, oscillates around, finds some daily support in here in the context of the weekly, regains the weekly, goes for a direct test to that monthly at 45.5, gets sold aggressively into. This was prior to the announcement for the ETFs, comes up and tests the next monthly, and closes just around that $47,000 while taking and running that bear market monthly swing high. And then what did we see shortly thereafter? Well, we saw a move right back to that 38.5 monthly. So these monthly levels, Bitcoin likes to test them directly in many cases. So if it's going to do it, it would be very likely, if Bitcoin's losing this basis, it would be very likely that it heads in for at minimum a test somewhere around that monthly at 47. Maybe it gets front ran, but I would eventually be looking for it to get tested if that were the case. Not a given. It doesn't have to be hit, but we have seen that Bitcoin has been playing very nicely with that type of backtesting structure for the monthly and weekly zones. But again, I mean, it's very bullish consolidating in the weeklies as it stands right now. I did want to check on the 6 hour because the 4 hour, as I mentioned, could turn up on any closes above basically here or higher. Yeah, basically right here or higher. Then we would see an initial turn to the upside in terms of momentum for Stoke. That's likely going to send the pivot number for Stoke down to the lows somewhere in the mid to upper $50,000 region. I don't think it would, it's kind of a tight range at the moment, about $1,000 range as it stands right now for the last day or two. And that does mean that invalidation is very close. If it did turn up, it sent the pivot back to the lows. If it moves past and closes below that pivot, it's basically meeting some of those conditions to the downside. Lower second standard deviation closures, wicks and test of the downside wicks, plus a Stoke turn to the downside. So it's basically checking all the boxes off. If it were to do that at minimum, it's going to at least test around the structure down here, in the mid to low 50s, 49k region, and then come back to it for maybe more. And the 6 hour is going to be the next thing to pay attention to, because this is all going to, obviously, I'm looking at this 4 and 6 hours. It relates to the 12 hour. Now the 6 hour can actually come down to the lower second test around the wick lows, and it's still as long as it's closing above the lower second, it's just a test of the lows in the current range, and I would look for it to continue to bounce. But if it can regain the lower first here, we're looking at 51,130 to around 51. I'm sorry, 51,130 is where Bitcoin's currently trading at. The lower first is currently at 51,172, so basically 51,200. Above there, then we're looking somewhere around the basis for a test, and that's actually going to meet some of the upside criteria for the lower term timeframes. But in this case, if it were to close anywhere around that basis or above it at 51,630, then we can start looking back to around $52,000 by the upper first. Above there, where you're looking, right back to the top side of the range, 52.5 to that $53,000 wick high. Of course, expansion above there would imply targets into the mid 50s, maybe more. But in general, I'd be looking mid 50s first, $55,000, $56,000. Of course, below the lower second breakdown, below the lows, it's the same areas that we just talked about on the previous time frames. Now, the reason why I'm saying pay attention to 4 and 6 hours, because any close above 51.5 on this current 6-hour closure, which is going to come in, or candle, I should say, which is going to come in at the end of the daily closure. So it's going to close with the daily candle. I would come back to this and see what that pivot number is updated. Compare that to the 4-hour, compare that to the hourly, all in the context of trying to get the look on what we're looking for in terms of expansion, coming off of this contraction in the 12-hour. So again, I want to draw your attention right back to this 12-hour and this beautiful compression that's going on. So we're going to, we can basically use those lower term timeframes to inform what we are looking for in the 12-hour in terms of confirmation signals. All right, that is going to do it. Oh yeah, and the 12-hour is pivoted at 51.5. So we start getting closures above there. This is likely to turn back up from, about the middle of the bearish control zone down here. Nothing too crazy though. Very good. Let's go ahead and check on a few other things. Let's go ahead and check on the taker buy sell ratio. Not seeing anything too out of the ordinary. At the lows, this thing has been spiking down to like 0.66, which has been telling me that you guys are probably going to get stuck down there. And in most cases, it has in those lower term time frames, and then they've immediately tried to reposition out of it as the buyers lift the offer, let's say, as you're going to hear in some of the order book guys nomenclature. But yeah, their buyers are then coming in as the support holds, and then kind of wiping out those bottom breakdown shorting positions, and causing them to reposition, which is keeping it on the lows in this case. So decent fight. Yes, this is low. It is more sells than buys here. That's fine. It's still holding the lows. Only when it breaks the lows will it be interesting. If we look at open interest, we can see that during this consolidation, we have had a decline in open interest. And one of the things that I have mentioned is you can play divergence off of open interest. But in general, on the daily, what I want you to note is on the daily, when open interest goes up, in general, price goes up. When open interest goes down in aggregate, price goes down. So it's all about preserving the markup, and that's the spot markup as it relates to contracts. So, in this case, looks a little toppy, but it can consolidate. If it comes down and higher lows its way up, you want to see open interest rising in general during the price rise. So if it is to drop, you're looking for this to head back to support, and for open interest to get lower or equal to an area of interest. For instance, if this was to drop to 12.5 billion around the prior highs here at 49 or 48K or whatever it is up there, and price stays there while hitting open interest levels in that area, you would, you're expecting it to try to hold. Of course, it has to hold price, hold open interest level, and then that's known as a spot markup at support. So Um, that is just a little tip for you there. But in general, you do want to see open interest rise with price. Um, but you can play lower term time frame divergences. So if open interest gets wiped out massively, but price is maintaining its markup relative to where open interest was at that previous level, you're probably looking at it being very bullish, is essentially what I'm trying to say there. CME still maintaining their slight lead over Binance degens, and that is what you want to see. You want to see the professionals in this market leading this market. To be quite honest, I know that a lot of people don't like that, but that is what you want to see. The other thing I do want to note is that CME is maintaining a pretty healthy markup versus spot right now. So it's also holding at the 12-hour basis, not playing in the lower deviations. It's also right around that upper first standard deviation. On the daily, it is not below it. So we are getting a different look on CME than spot price. We don't have any in-trend bearish divergence. We have, hidden bearish divergence, but no in-trend bearish divergence. That's going to be the more important bearish divergences. You're not seeing 3-candle high structure put in place yet either. So until we see something like that on closes below 50,635, then we're looking somewhere back around the deviation highs at minimum. And the basis for CME is coming in right at the high closes there at 47,300. Now it is maintaining a markup. So the equivalent of 47,500 or so here is probably around $47,000 at the monthly. It's about a $500 to $600 or $700 markup, depending on what time of day you're looking at CME versus spot. But it has maintained its markup. So I do want you to file that one away in the back of your minds as you are evaluating trade setups. And now let's get into a little bit about the Slipstream conversation here. So for those that may not understand what's going on here, let's go ahead and pull up the website here. So we're going to do, I thought I had it up, but I must have closed the tab with it by accident. All right, Slipstream is Marathon Digital's. I searched X for Slipstream, and I'm glad that I didn't do it on the tab that's streaming right here, because it just showed me porn, and that's not cool. All right, let's go ahead and pull this up here. Let's get the Launchpad stuff going here. So here's their press release. All right, so Marathon Digital, for those that don't know, they're one of the largest cryptocurrency miners basically on the planet, but they're a publicly traded company. They have an enormous amount of hash rate on the Bitcoin network. And, what we're often seeing from them is usually playing pretty well with the fact that they are a publicly traded company. They've typically been, I know that people have their gripes with them, but, in general, they've been very open about what they're doing and why, which is what you want, because they could be doing things in secret and behind many of the node operators' backs to undermine things, and they don't. They've been out in the open about what it is that they're planning to do. So they're launching this product. It's coming out on Monday, and I do have a few notes here on it. Some of this is from public stream. Some of it is from information that I've gathered on my own. But this apparently is going to go live on Monday. And what this allows you to do is submit non-standard transactions to Marathon Digital directly. So for those that may not understand what they're doing here is, when you submit a transaction like this is an out-of-band transaction, meaning that you're submitting a transaction to them for an elevated fee over whatever the current block fees are at high priority, and they will mine that transaction on their internal mempool and then broadcast that out to the public mempool. So if I'm losing any of you there, let me just give you a brief explanation of what the public mempool is. And we're also gonna drop down some of their stuff, some of their official information that they are coming up with here. But an internal mempool versus a public mempool. So the specific Bitcoin node operators, or pool operators in this case, that manage their own nodes, each pool has its own internal mempool where they process transactions internally, and then those transactions are broadcast to the network so everyone can see them, and then consensus protocol is still enforced internally and externally. But what's happening right now in the Bitcoin sphere is that many people, there's many developers, and they are split on Bitcoin as to its use case for non-standard transactions. There's some that are very adherent to the original Satoshi vision, where they do not want non-arbitrary inscriptions, or even arbitrary inscriptions. And a lot of this has to do with basically blockchain bloat and spam. And when mining, you can download, or you're joining a pool, you're downloading their mining template, and you're mining in accordance to that template, where essentially there is censorship of certain types of transactions over 400 bytes, or 400K, depending on the actual size of the data that you're trying to submit, a bunch of inputs and outputs. Maybe you're aggregating all to one address and you're outputting to a bunch of others. But it really comes down to UTXO management. And if you're not familiar with that term, I do suggest that you start looking into Bitcoin a little bit more and understanding what UTXOs are. But essentially, most nodes will throw a lot of these transactions out. They're too big, too much data, so it's not even going to process it. Even if you can peer with one that will, the consensus nodes will not do it. So what they're offering is a service for you to submit those transactions directly to them and their internal mempool. You will pay, it's 1.5 times the high priority rate. So whatever the high priority rate is at that current point for whatever current block is, you'll be added into their current block in the internal mempool. Whatever the high fee rate is for that block, you will pay 1.5 times the rate, and then they will add you to the list. Now, the output transaction likely not going to be mined until much later. But essentially, you're probably looking at like, it depends on how often they're mining blocks. They're mining, like, I think they were talking about like 4 to 6, sometimes 8 in a day. That 8 might be a little aggressive. Of course, that's going to be less as the halving comes into play. So you're probably looking at 12 hours. You're still mining the same amount of blocks, but you're getting less for them. You're probably looking at 8 to 12 hours after submission. And they are basically loosening up the templates to allow for larger data sizes. And this essentially plays into the BRC20s and the ORDs and all that kind of stuff. They know this, and it is going to contribute to, they have recognized a problem in the market, and that is bloat on the blockchain that is slowing network speeds down and driving fees higher. But of course, those fees are already going to stay high. People can submit direct to them. Transaction to them stays private until broadcast to the wider network. In my opinion, what they're doing there is not as dangerous as many are making it out to be. Could it turn real bad and centralized and all that kind of stuff, where they're using their internal mempool to facilitate non-standard transactions. They're not speeding up your transaction, essentially. These transactions in many cases are usually going to be rejected. But essentially what they're doing is it's a service directly submitting large non-standard transactions to Marathon directly so that they can process it on their internal web mempool. Why would you use this? Slipstream users want their large or non-standard transactions to be included in a block. Typically, most nodes will automatically reject these. They're based on templates and policies in those templates. It's not always the case, by the way. There are some nodes that will process this stuff, but of course, it's not the norm on the public nodes. Typically, many of these, if you want to do a non-standard transaction, you gotta mine it yourself, internal mempool, and then broadcast it. And essentially, they're offering that as a service. And in this case, rejection occurs, and you don't even get the broadcast through, or you don't even get you basically are rejected, and you're paying a fee to get rejected, by the way. In this case, how can you submit? You create a raw transaction. If you're unsure how to create one, yeah, they have a guide for it. And then you verify the transaction details with them through their web form that's going to open up on Monday. You sign in, you sign the transaction with your private key. And then you basically give them the hex, their transaction data, submit it to their Slipstream portal, which will be operational soon. And then they will, give you the quote for the 1.5 times the high fee rate, or the high priority rate. And then you can submit your transaction to them. They'll mine it internally on their internal mempool. Yes, there is internal mempools in every pool and node. Okay, it's an internal mempool. They have their own, and most likely what's happening here is they probably have a bunch of excess internal mempool availability, while that's not being utilized, and this is a way to utilize that and offer a service that, of course, allows them to aggregate fees. And that's also another reason why there's a big rift about this particular subject, because, well, this means that, you're just trying to fee grab, and then, all of this other stuff, and it lends to consent. It's against the total network consensus. And, one of the bigger retorts to that is all these other nodes have to do, all these other node and pools, all they got to do is just do this themselves, like just offer this as a service themselves, and you've got equal footing. The public network is not affected by this. They are talking about, everybody that is upset about this is talking about, it's going to lead to blockchain bloat and slowing everything down so that you have to go through them, and it's centralization. And sure. And until other node operators just offer the service themselves, and then we're right back to where we were. So, but they do have a significant amount of hash power. So, and they have probably underutilized internal mempool space. You might as well monetize that, right? I honestly don't have a negative opinion of this, nor a positive opinion. Is your transaction guaranteed to get mined by Marathon? No. Once accepted by Marathon, your transaction will compete with other Bitcoin transactions for inclusion into the current block, because they're not guaranteeing you the current block, but they and that's their internal mempool block. It won't be broadcast until later, but you'll receive a personalized link to view your transaction status. Now, we're going to get to some interesting stuff here. I want to support. Yeah, yes, you can. I want to support you guys. Just so you know, this was a brainchild of one of the Bitcoin Core contributing developers. So just understand that the person who's thought this up and brought it to their attention is a contractor who works on Bitcoin Core, which is what everybody typically uses for mining. In general, anyway, they're not a direct employee. They're trying to solve a problem. Are my transactions private? Yes, in fact, you can probably aggregate all your transactions here, basically, is what this says. And then it's private until broadcast. But this offers up some pretty interesting stuff that I do think you should understand, that I'll get into in a moment regarding BRC20s and ordinals for those of you degens who are minting ordinals. By the way, thank you for minting those to my wallet. I appreciate that. That was cool. I'll be in touch with you shortly regarding that. Will Marathon censor transactions? Well, this is the whole point of this. Essentially, what they're doing is they're loosening up the template rules when you submit directly to them, so that they can mine it for you and then broadcast within the constraints of the current template rules that are on most nodes, so that those transactions are now valid on the public blockchain. And just so everyone understands, like, there's testnet blockchains, they're all internal. Like, if you try to broadcast from them, you're going to be rejected by templates on the public network. So, like, it's not valid Bitcoin that you're mining. On many, if you could start your own testnet, you can mine Bitcoin there. It's not going to be valid when you broadcast it to the public network. So they can only mine valid transactions, and they can only broadcast valid transactions. Is there room for other funny business? Sure. But everybody that's doing ordinals or BRC20s or layer 2s on Bitcoin, well, many in the Bitcoin community consider that an attack on Bitcoin, blockchain bloat, and all of these things that honestly I don't really have a well-formed opinion for you, other than I own a lot of ordinals. I own Ordi as token. I own BRC20 tokens myself, so I mine them on my miners. I don't reject those transactions or censor those transactions. I'm going to take the fees. You got to. I mean, especially as this is all launching just before the halving as well. So I think you can understand why they're doing this. But yes, they do have the right to say no, what you're submitting to us is absolute garbage. We're not going to process that. Is essentially what this says. But in general, no, the whole point of this is to loosen the template standard so that you are not censored from transacting. And yes, I know the slippery slope people out there have valid points. Is Slipstream siphon resistant for BRC20 reveals? Yes, transactions submitted to Slipstream. This is where things get interesting for those of you that like to mint tokens or contract deploys or whatever. There's a million different ways this could be used to do sudden drops of cool stuff. There's cool things that can be done with this. So you've got Taproot stuff and BRC20 stuff and all kinds of fun stuff. That's, essentially what most of the people who are against this stuff launching, it's more that honestly, it's more that Marathon is doing it, and they're a publicly traded company, and a lot of the big ETF providers, which here's the other angle to this, a lot of the ETF wrapper AUM companies are, well, they're invested in Marathon Digital. So there is a reason why this is interesting, because maybe they want to get their large transaction through, not just a large non-standard transaction, but a large transaction through. They wanted to, maybe they couldn't go OTC. They got to go mine. They got to have it mined. That transaction has to be mined through OTC anyway, but you understand what I mean. It's not somebody hasn't already done it and then is just handing you the keys to the wallet. But in this case, a valid transfer that needs to be shown on the blockchain. So, you get a lot of Bitcoin that needs to be transferred to custody or out of custody, and you can hide that for a specified amount of time at minimum before it's broadcast to the wider network. And it also, honestly, offloads some of that processing power to their internal mempool so that it doesn't clog up, and or cause issues with some of the problems that you could run into trying to perform that same large transaction or aggregation transaction on the public blockchain, where it would be just knocked out of the censored is really what happens. The transaction would be censored. Can you use replace by fees or RBFs? Yep. Use child pay parent? Yep. How is Marathon unique, unlike other large or non-standard transactions? How are they able to accept it? Well, unlike other miners, they do not depend on traditional mining pools that are composed of multiple miners who must aggregate their hashing power to earn steady, predictable mining rewards. Essentially, what they're doing here is they're flexing. They're saying we own enough hash power ourselves that we can literally internally mine this on our internal mempool Whereas on a public pool, you would have to get the entire public pool to agree to a template switch, and that would have to be, adoption through the pool, by the pool operators pushing out whatever template they want. And then, it's either a yay or a nay. The template's either going to be implemented on all of those who are going to join the pool, or they're going to leave the pool. And in this case, if other pools want to do something like this, they could. But the advantage here is they don't have to worry about others saying no, because within their pool, their own internal pool here, they can do it themselves. So there's a lot of people getting their feathers ruffled about that, because it's also kind of a flex. And the implications behind a company like this flexing like that is that, well, they could eventually attack Bitcoin directly with a 51%. No, they're not. No, sorry. But one thing that I have been talking about a lot lately, as you might recall, is mining. So many of you have been here for the live streams where I've talked about mining. And that is where I've suggested and even shown that you can pleb mine. Are you going to make money pleb mining? Probably not. But it is something that you can do, and it's more like lottery mining. You can mine with some of the bigger miners with decent, hash rate. You can mine. You're gonna make maybe $30 a month with a decent heating miner. It'll take time to offset, the energy costs and the cost of the miner. Most come in like $800 to $1,000. You can get real fancy and, up that to maybe 15 cents maybe up that to like $1.50 or $2 a day, in terms of processing transactions. And then you're also entered into possibly the block lottery. Maybe you're the one that ends up mining that block, and that's a big payday. That's huge, right? You mine the actual block, plus you're getting the transaction fees consistently. You can join pools where you're solo mining, and that is lottery mining. Maybe you mine a block. If you do, there you go. You paid yourself a lot of money in that case. Most of the smaller miners in the gigahash rate are going to be lottery mining. You might make dust here and there in terms of BTC, but you're also barely paying anything on the electrical side of things. I mean, it's like most of them are running 15 to 20 watts, maybe 25 on the high end, and they are really cool. And it teaches you about how to manage. You're running your own node there, so especially if you're solo mining, you're running your own node, right? You can join a pool if you want, and get consistent returns on it. It's going to be dust, but more importantly, you're managing your own wallets. You're managing your own transactions, that are then being broadcast to the network. And of course, you can solo mine and define your own templates. You can do whatever you want. But if you're defining templates that are too open or too restrictive, you might pass some of that information off, and or not, and it gets rejected, and or it doesn't even get accepted in the first place because of your template. But learning about that stuff and learning, you got to learn by doing, and that's installing something like Bitcoin Core, downloading the blockchain, excuse me, as I struggle to say blockchain, sorry, but you really end up like, it's 650 gigs or something like that, but you can prune it down to 2 gigs, but you're only keeping like 6 days of transaction history. So, in terms of viable look back for yourself, but you're still contributing to the security and decentralization of the blockchain. So there is something that people can do, and that's home mining. Heating miners are going to be the bigger play for quite a while. And that is, buying basically space heater miners. That is the repurposed ant miners that they throw in specially molded, space heater style stand-up units that you can plug into your outlet and just go. Now you're mining Bitcoin, it's offsetting some of the power that it's using, and it's giving you heat in return. So, I know a few people that already do that. Although being here on the west coast of the U.S., well, it doesn't get cold very often, so we don't really have a need for that. There's also ways in which this is going to be integrated into public projects. There's already cities that are mining Bitcoin, and it's already offsetting, its power, and in many cases, it's allowing them to secure their own wallets, right? Their own keys, and process their own UTXOs, and really craft things the way that they need them to be crafted, so that they're not subject to, doing, not having a measure of control over their Bitcoin. So there's some places in Texas doing it. There's other places, even in California, where they're running miners, holding Bitcoin, and and in some cases even putting ETFs on their books. So this is going to continue to grow on what many would consider the home mining or solo mining side of things, but you're also going to see cities and states themselves get involved in this. So it's naturally going to spread out and decentralize, and you're going to see a lot more products like Slipstream. I guarantee it. You're going to see stuff like that for direct submission to the internal mempool of some big mining pool and or company, and they'll process it at a higher fee for you and then broadcast that to the network later. It does allow for you to have that that privacy of that internal transaction for a set amount of time, or aggregation privacy as well, and then it's broadcast out later, where people can go and look. But it does obfuscate certain things, and there's ways to obfuscate transactions right now. It's just that if you're good and you have a good oracle and a good methodology, you can look in and backtrack most things on Bitcoin's blockchain. But it's public. It's a public ledger. Once you start broadcasting to that network, we're going to see it. So, yeah, that's kind of all I've got on that end of things. Do you guys have any questions? I want to look through chat and see if anybody has any questions here. I see. Let's go ahead and turn the music back on. Not going to get into traditional markets, alts, and all that stuff today. I am running a little behind on things, so let's see. Let's go ahead and turn on some tunes in the background. And let me come over here to chat and see what you guys are talking about. All right. Hello, Sam. No Name, Baba, Spin, Bobby, and all the others that are not currently chatting, but I can see you hanging out in the stream. If you would like to chat, I am able to directly watch the chat in YouTube, so you can head over to Landy's Crypto Corner on YouTube and you can chat there. Just go ahead and sub. I do have subs turned on so that bots don't flood my chat. And especially if you're in Twitch, because the Twitch chat plugin that I have is not working correctly, and I have not had the time to take a look at it. And X.com does not have a chat plugin that is worth a damn right now. So head on over to Landy's Crypto Corner on YouTube. You can sub the channel. You can chat down here with us. All right. $4 needs to regain the basis. Yes, it does. Let's see. Bobby says no problem, sir. Oh, I must be, yeah, the ordinals. Landy, can I check on Binance? There is a week 8,000. Sam, you gotta tell me what you're talking about. I have no idea what you're talking about. Liquidation chart? What about it? Is that what you're asking? 8,000. You're saying that there's a wick to $8,000? Is that what you're trying to say? I'm confused. Or there was 8,000 Bitcoin liquidated? I don't think there was that many liquidations. Open interest didn't drop. I don't know which chart it is. And it's probably not real. So from X, it's Binance. You would have to tell me when this supposedly occurred and on what time frame, because in many cases when it's a bug, it will show on one time frame but no others. Like for instance, Binance Tether has nothing, and it wouldn't be liquidation. If it's a wick, it's not liquidation. You're looking at price on a wick that went to $8,000, I'm assuming. I'm not seeing any of that on Binance right now. So I'm not seeing anything up. That's on USDT at least. I mean, we can look at Bitcoin on, let's look at this one. 15-minute, there's nothing. Yeah, you're gonna have to find it because, yeah, I mean, we're looking at Binance Spot here. Not there. It's not on their USDT chart. Maybe it's on their coin margin chart. Let's see. So we got Binance, USD. Do their coin margin chart. Nothing. Yeah. I doubt that's real. I mean, it just based on what I was showing you with open interest, I highly doubt that's real. It's probably a bug, and it probably went away. Asking if they might have liquidations at the low time. I really don't understand what you're asking. You're saying that traders have liquidations at 8 and 10K? Maybe. They're super low leverage. I'm not really sure what it is that you're trying to ask. I mean, a super low leverage trade from like the mid 40s probably has a liquidation at like 8 to 12K or something like that, maybe 14, depending on the size of the trade and the leverage. But then you're like, from the range even just below at 40 something, you're looking at a liquidation level of probably, you'd have to be on like 2 to 3x to get a liquidation level of that low of a target. But that doesn't matter. I mean, price didn't go there, and you're not seeing liquidations in that manner. Not seeing the volume supported in liquidations. I mean, liquidations have been nothing. We're looking at, 15.86 million aggregated liquidations on the move down before this downtrend from uptrend. Nice deviation, took the highs at 53 and then smack back down. That was the most liquidations we've seen. There's no, I mean, you can come over and look at the liquidation, like the actual liquidations that have occurred, for the past about 24 hours. 24.37 mil. It's not a lot. Look at Binance over 24 hours. 73% liquidations were long. And yeah, they're about 71 million. That's nothing. Are you saying that Bitcoin should go to 12K, 8 and 12K? Is that what you're trying to imply here? Is that because there's liquidation levels down there, that it should go to those areas? Because if you are, sir, you are nuts. Because that's not how liquidations work. It's not how liquidity works. There might be liquidation levels down there, but bringing price all the way there just to get fills in that area is a silly thing to do. And this implies that the market is fixed by market makers and that all market makers are colluding together to drive price to a specific area. There's no wick. There's no wick on. You're talking from the local range? Are you talking from historical? There's wicks all over there. It doesn't matter. What you got to understand is that the wick can go all the way to 0. It doesn't matter. There's nothing, there's no support for that in open interest or liquidations. There's nothing. If the wick went there from like the local range, for instance, it's not real. There's nothing that was there. There's nothing reflected in any of the open interest charts. There's nothing reflected in volume or any of that. I mean, we're on futures contracts for Bitcoin, which is, I believe this is their coin margin contracts. Volume is stupid low. If we saw any kind of a wick from, like, are you talking from this range? Not now, the next big crash. Why would the next big crash have to go there? There's probably more aggregate liquidity in the local range than there is at 12K. You have no liquidity all the way down at 8 and 12K. That makes no sense. Like the next big crash, what defines the next big crash? Like that's where you're losing me here. It's like projecting 25 steps ahead and things that would need to happen before then. Like people wouldn't close their trades before it got to $8,000 to $12,000 or whatever. Doesn't make any sense. Meaning a bug okay. First of all, you're saying the next big crash, and then you're saying that there's a wick to $8,000 to $12,000 or whatever it is. So which is it? Are you talking about something that could potentially happen in the future because of this nebulous idea that there's this built up liquidity down there in terms of stops, or not stops, in this case it would be liquidation levels, which you would never even get there. You could get a cascade of liquidations down there, but nobody from this range is going to get liquidated at $12,000. If they're not out of the trade by then they're stupid. Okay, that's first off. Second of all, if you're saying that there was a wick to that area, are you saying that there's a wick to that area from our current range? Is that what you're explaining? You saw a wick to that area? Is that what you're saying? Because these are two separate things. Like for instance, where Bitcoin is trading now, you're saying that a chart on TradingView showed a wick to that area. If you're saying that, then you need to let me know, because that is a bug. That means that they pulled, when their API is pulling data, something got goofed up. Now, if you're talking in a couple years, Bitcoin going to 12K, why would it have to go to 12K? Why wouldn't it go to 30K instead? You probably have more swing long trades from that area that if they don't close at the highs will probably be built up in that area. I still don't understand what you're saying. There's a wick but from before. I have no idea what the hell you're talking about. Just because there's a wick to 12K means nothing. It means nothing. You can look at your chart and you'll see wicks down to $300. I go back years. What does that mean? It means nothing now. Does that mean that there's built up liquidity at $300? No, those are cold storage coins that probably haven't moved in a very long time, and or they're dead wallets because they're lost to time. They're not going to get liquidated. You can't liquidate coins that have been moved to cold storage. So what you have to understand is liquidations is based on leverage. It's based on people longing and shorting. So a liquidation level. Oh, Sam, buddy, I think you're misunderstanding how price works. price works based on a bid and ask, right? So on a bid and ask means that people are willing to buy or sell at certain levels. And when you're talking about liquidity and liquidations, when you place a long order on an exchange, leveraged or not, you're going to get a liquidation level, meaning that if price drops below this level, we are going to liquidate the entirety of this account for the funds to give to the opposite side of the trade. Okay? What you need to understand is when we look at something like Bitcoin, for instance, we can see that Bitcoin's aggregated liquidation rate. This is all the aggregated liquidations just for the local range. That means that people are longing the bottom, or they longed up here at the top and then they got wiped out of their trade. Now, when you see this chart, in most cases, the API data that's being pulled from the actual exchanges does not necessarily differentiate between stops and liquidations. Okay, they're not tagging it necessarily as liquid. Some do. Binance is usually pretty good about tagging this as an account liquidation, but in many cases it'll also aggregate stops as liquidations. So stops getting hit will show up in many cases as a liquidation. When this is only really understanding the back end of the API calls is really what you need to understand about that, but it doesn't really matter. Either way, let's say they lost their entire account. What happens to that? It just goes to the other side of the trade, right? If they were long, it goes to that short side of the trade. If they shorts are getting wiped out, it goes to the long side of the trade. So that's how liquidity works. And what you got to understand is, let's say your hypothesis is that because there is this wick to $12,000 on some time frame that doesn't really matter to me or you, and it shouldn't, because if it's a wick, it was probably into a support. And are you looking for the wick to be filled out? Are you looking for liquidity there? Because if you're looking for liquidity there, you're not looking for liquidations. Price can trend all the way. Price could put in a high here and trend all the way down and break the $15,500 lows and go to 12,000, 8,000. These things are absolutely possible, however unlikely from here. But that has nothing to do with the wick on Binance being there. That has everything to do with trend, support, and resistance, and the order book, right? Could you get actual account liquidations on the way down? Yeah, most people would probably try to long all the way down and keep getting liquidated, giving more fuel to the other side, and it becomes a race to the bottom. No, wicks do not need to be filled. I don't understand where this concept comes from. This is from like crypto Twitter and market maker theory, which is complete bullshit. And what you need to understand is wicks do not need to be filled. Do they get filled? Yeah. But do they need to get filled? No. It's all about where the current liquidity pools sit. For instance, these are one of the, what you're explaining to me right now is one of the reasons why I started a channel and brought it public, because it's that misconception that needs to be addressed. And one of the reasons why I went through, this channel was private for a very long time, where it was just me and some friends talking. It was an easy way to just stream through and chat with friends. And we took it public because they wanted to invite some of their friends. And then they said, hey, this is really good information. Well, one of the reasons why is because of the misconception of, one, that wicks need to be filled when they don't. That's like saying that gaps need to be filled on CME. We leave gaps behind on CME all the time. We leave gaps behind on traditional markets all the time. Do they eventually get filled sometime later? Well, if you go back to the early 2000s, do you think any of those gaps got filled? Think they're going to get filled from here? No, they're not. So what you need to understand is wicks within a local range might, get filled. But if you go out to, let's say, the daily on, this is futures contracts. Let's go over to spot. Okay. Now, if we go back in time, and we'll go on a weekly, and we say, okay, there's this, well, shit. To even get to the level that you're talking about, there was no wick there. Maybe Binance got there at some point because of its liquidations into that area where spot went to 15.5. Maybe it got there. Some places went to 13 and 14. That's like saying that, okay, here, this $15,500 wick down here needs to be filled. Why? Who are you going to get out of position there? It doesn't need to be filled by anything or anyone. Well, it wasn't retested. Does it matter? This wick right here, down to 19.5K. Does it need to be filled? Absolutely not. Is there liquidity there? No, there was liquidity there. And the reason why you see things work in the way that they do with price, and why price revisits areas of importance, for instance, I call out the close opens all the time. I call out deviations of those close opens, which are the swing highs and lows. Those are your wicks. Your swing high, swing lows. Those are wicks. Sometimes the wick and the close are right on each other, but in most cases they're not. You'll usually have a small wick or a large wick. Sometimes medium wicks, but you will usually have a wick or a shadow on the candle. And that's just showing you that there was demand or you know, there was liquidity in those areas, whether it was buying or selling liquidity, meaning it was a liquid zone. So there was a liquid zone all the way down to $19,500 on this candle. Does that mean that that is still a valid liquid zone now? No, the liquid zones are all right here around price right now. So could you fall through those liquid zones to other historical liquid zones? That's support and resistance. That's what we're looking for, because you know, we're looking for support and resistance zones. That's why the resistance to the upside works, right? This was the bear market high. So why is it a liquid zone? Because people are selling based off of that bear market, you know, swing high here, and well, this was the bull market weekly swing high at 53. So people are willing to sell Bitcoin there, whether they're actually selling cold storage Bitcoin or hot wallet Bitcoin, or they're leverage shorting Bitcoin. They're willing to do it there because it is a historical zone of interest, so they place their liquidity there. Their stops could be at $60,000. Could be right on top of price, depends on their leverage. And if you rip through their account by taking out their stop and hit their liquidation, then it's just going to give more fuel to the other side, because it has to be it's going to go right to the other side of the trade, because they have to buy out of that position in order to satisfy the liquidity levels that they're pledging through these centralized exchanges. So there's no such thing as like, because there was a wick to 19.5 or to 15.5 or to $10,000. It doesn't matter. It doesn't matter. Like, there's nothing technical about saying that it has to be filled. There's no support for an argument like that. It is pure speculation. It is not technical analysis. And you would see that there's far more liquid levels right now, right around price action, right? Maybe you've got some swing longs from the $30,000 region, maybe, that are still left, that haven't averaged their way up locally. Once you take them out, you got to go find that liquidity, right? You've got shorts just above price that are higher leverage that you could take out that could probably push price to the mid $50,000 region. There's longs right at the bottom side of this range that are probably going to get taken out when the range falls. And when they get taken out, they become sellers. And that's where you find the other areas of interest. Where were people lifting the offer or placing their bids? So I want you to understand that there's a really big narrative pushed by people who have no clue how to actually do technical analysis, but they play like they do. They might even sound really smart and they have a system and like all this other stuff, but in reality they don't understand how trading works at its core, or its base, meaning the actual auction itself, and why things work the way they do. In many cases they don't. They go off of like, you know, here's this pattern, here's this trend line, here's this, there's that, and what they use might even work for a little while, but in large part they don't really understand why that works that way. They don't understand how to deconstruct an order book by looking at a chart, because they don't understand how to read volume in comparison to support and resistance for zones for bid and ask. There's other guys that really do. They understand this and explain it in really simple ways. You've got your MDX cryptos of the world. You've got your Crown cryptos of the world, or Eric Crown now. You've got a bunch of, your Pizzinos of the world. Those guys are pretty good over there. They're not always going to be right, neither am I. But the point of the matter is that they actually understand how these things work at their base level. So everything that we're talking about, and myself too, I include myself in terms of understanding this stuff at more than its base level. I've actually done this stuff for a very long time. So like understanding this by actually placing those orders and filling those orders, right? By doing that, you understand how the bid and offer auction works, right? So when you understand that, you understand where liquidity lies. And then historical liquidity is just where price traded and closed and the highs and lows of that historical liquidity, right? So you need to understand that just because $69,000 was the high, or the previous all-time high, there's realistically no, outside of fundamentals and demand, there's no reason why price should go there. It's not like a given that price should just go there. No, people have to bid and they have to desire that asset. So they got to place their bids, and people got to say, nah, they got to provide the other side of the trade. Like, I think it's going to go down. And then whichever side overwhelms the other is going to drive price in those directions. Because there's historical price to the left on your chart for Bitcoin, we have historical areas that were resistance that will become resistance again. Whether they get front run or whether they are directly on point, like some of the downside and upside areas have been in terms of support and resistance, is all based on the current desire, not the historical price. It's the bid and ask auction is everyone looking left and going, well, this area was traditionally a place where somebody bought or sold. So I also think, based on these factors, that I will either buy or sell in this area. Okay? And then they usually have a well laid out plan for why, and you should have risk management, practice good risk management, and they set their bids and asks in those areas of interest. That's why I call them areas of interest. All the support and resistance areas are just areas of interest. There's no other reason, that there's no given that things should happen, right? It's like saying that 69K could be filled and we could drop to zero. It could happen, but really what's the desire there? Where is the liquidity? Is the liquidity at zero? Are people really gonna exit at zero, or is there demand? So then you got to understand, where's liquidity. Downside supports are demand, upside is I'm sorry, what? Sorry, hold on a second. Yeah. No, just let me get back to you on that. Cool. Thanks. So you've got downside supports as demand, and then upside, resistance is supply, right? And, extrapolating out areas for trading is going to be based on the liquidity areas that are likely to be demand and liquidity areas that are likely to be supply. Where are people buying? Where are they selling? I don't think there's many people expecting or placing bids right now for $12,000. And if they are, they're probably going to be waiting a very, very long time before they get hit. So there's no reason to go to $12,000. Now, if price were to trend in that direction and Bitcoin continuously loses levels, maybe that becomes an area of interest over time. Okay, but there's no reason for it to be an area of interest to even talk about right now until something like that were to happen. You know, a daily, weekly downtrend that breaks all the lows and just continues down. Failed, you know, auctions when it bounces. You know, bids fail to lift the offer and break back into previous zones of support. Thus, previous support becomes resistance. And then maybe those areas become viable areas to look for demand. Is there going to be, would there be, and then you have really where we are is there hypothetical demand at $12,000? Absolutely. People will go nuts. Where are you going to get the supply to push it down there? When you've got ETFs hoovering up a week's worth of supply in a day, you need a big player to come on market and sell their Bitcoin to create that supply. Right now, the demand is outstripping the supply that's output by a week's worth of mining. So that's only going to get harder. And by the way, it's only going to get harder infinitely. So the idea that these things, especially from a technical point of view, Bitcoin has never taken out a prior macro low. So I just want to point this out before I get off this subject. Which, you know, I mean, it's a good thing that you asked, because I'm obviously taking the opportunity to correct this particular narrative. You got a macro low here, got macro lows here, macro low here, macro low here. Bitcoin has never taken out a macro low. Not once. The only time that what defines a macro low? Well, for the monthly chart, it defines a low followed by, it defines a major low that results in a temporary uptrend that then, in this case, is a lower high to higher low, which is another major low. This major low then takes out the high and creates what? A macro low. The originating low is now a macro low. This major low, first this was a major low, but after the next major low gets put in, the low prior is the macro. So there is no reason to look for liquidity down at $12,000. Not from here. Is it available? Like, is there the potential from a volatility standpoint for Bitcoin to just run the other way to $10,000 at the lower second? Sure. It can do anything it wants to do. It can reject the upper second and third. It can maintain an expansive posture and just shoot right through it to it. But who right now is going to have enough supply to throw on market to do that? Like, ETFs start selling, maybe they go through and they just start redeeming. You know, they have a 90-day window where it's, you know, they're not doing redemptions. So maybe they just start redeeming. And then it just drops everything. Sure, that could happen. But they also would be redeeming, you know, people would be selling, right? Selling the ETF, which causes a redemption. They redeem for cash. ETF then goes and sells the Bitcoin on the open market. They have to, at whatever the mark price is. You know, they'll arbit, but either way, it's going to be at whatever that mark price is for that closing day, right? So they'll have a period of time coming into the close of day, and shortly after the close of day, then to process those redemptions, which means you go to the custodian and you say, okay, these are off the books now. and they arb trade that away. Could that happen? Sure. Yeah, they got a lot of Bitcoin, but it's highly unlikely because they're going to hit massive areas of demand to the downside because they've been strip mining that entire supply for the future. I mean, they're hoovering up enough supply that we cannot currently meet the demand with the current block output, right? So they're hoovering up like a couple of days worth of supply at a time in one day to a week in one day, right? And that means bigger players need to come on the market along with them that don't desire to have Bitcoin in their wallets and sell it at the same time. Then maybe it could get there. Maybe. That's a big maybe. I've never seen an expansive phase kick off on a monthly time frame that resulted in it running immediately the other way during the expansion phase. Coming into Bitcoin coming into the halving, by the way, mining rewards are going to be halved, right? So that means even less supply on the market. So they could liquefy the market by getting a bunch of redemptions in. That's, me and you and portfolio managers selling their ETF shares that cause redemptions. And right around the halving, they could do that. What's it going to do? Probably just stabilize price because demand for Bitcoin is huge. Also, they wouldn't really be doing that and then kicking off multi-million-dollar ad campaigns on television and all over every major city for their ETF product. They wouldn't have their heads out there just shilling the shit out of their ETFs and Bitcoin in general about how great it is and how it's immutable. Blockchain makes it, and limited supply make it better than any other asset on the planet. They would not be talking like this if they themselves had some kind of crazy plan in their heads to dump the entire market, which if they did, of course, the flip side of that is they all collude together. They all dump the market for what? So we can all get cheaper Bitcoin? Because if they were to hoover it up fastest, all you're going to see is wherever they dump the market to, it just turned into the largest wick that you've ever seen in your entire life. Like, oh, we're going to dump it down to our liquid zone. Yeah, you move the market. Market makers move the market to liquid zones. Are they going to? They're also the same ones that are taking the opposite side of the trades in the market. So when a market maker provides liquidity, they're literally taking the opposite side. So if everything's going up, which side are they taking? They're taking the short side, which means as soon as the market starts to fall, they have to take the buy side. So they're going to take the buy side at a certain level as well. They're going to arb their way down to the most liquid zone before price reverts or reverses. So that's how market makers actually do. They're obligated to take the other side of the trade. That's how they provide the liquidity. So that's really where a lot of the misconceptions come in. Like you could literally have every ETF dump out right around the halving, which sure, maybe they do. But the market maker has to take the other side of the trade, right? So if the market maker is taking the other side of the trade and then public's taking the other side of the trade and supply is becoming more restricted, you're just liquefying the market more to try and get to XYZ level. What if it doesn't get there? There's so many things outside of their control that you either got to coordinate, which is illegal, and when in a public market setting like this, coordination like that would very quickly be investigated. That doesn't mean that anything ever comes of the investigation, but it would very quickly be investigated. And every market maker that facilitated that would have to testify. So what's to stop Bitcoin from everything I just explained? That's what stops it. Trend, support and resistance, which is areas of interest, which is areas of liquidity. Volatility levels, which is the implied volatility of the Bollinger Bands and BBWP within and outside of the upper second in this case. So expanding price volatility within the context of expansion of the Bollinger Bands. And from a fundamentals point of view, we're looking at supply and demand. What's to stop Bitcoin from dropping below 15,500 or the most recent macro low? Supply and demand. There is more demand than supply. And that supply is being restricted. Okay, that's really what it comes down to. So understanding that at the end of the day, what you're charting in TradingView is historical supply and demand zones in a charted format based on a live auction. So you're just looking at the record of a live auction where people said, I'll buy, I'll sell. And then to provide liquidity in many of these markets, you have a market maker. And when I say a market maker, it's not just one guy who's the market maker. It's not Steve. And you have many, many market makers and market making firms that will provide liquidity. And by making the market, they're taking the other side or the opposite side of the trade. Now, and it's like, extrapolate this out into staking. What are you doing? You're becoming a market maker. That's why they pay you a freaking rate back. That's why they give you coins or give you interest or whatever the hell they're giving you when you stake on ETH. What are they doing? You're providing liquidity to the market. You're the market maker. You go on your exchange and you loan them USDT or USDC and they give you an interest rate back. What are you doing? You're providing liquidity. You're literally a market maker, and the auction engine is utilizing that liquidity, right? And you get something in return. You get an interest rate, right? So market makers facilitate the liquidity within the markets by taking the other side of the trades when you're actually a licensed market maker. So it's I'm not going to get so far into the weeds with that, but essentially there's a huge misconception out there that market makers want to push price to these areas so that they can get their fills. They're not making money on the actual price of the asset. They're making money on the movement of the asset and the arbitrage between the two. They're making money on the other side of the trade. But then when things reverse, they have to take that side of the trade. It's literally an arbitrage game. They're not in it for $12,000 or $125,000 or $500,000. That's not their game. They're literally taking the other side of live trades while the auction is happening to provide liquidity for the other side, right? So it's an arbitrage game. And yes, they'll push price to liquid zones where they have to take the other side of that trade. But it's still an ARB opportunity. And they make money on the ARB, on the extremes of the trade. So, and that's a whole nother. So in other words, exchanges would buy Bitcoin at 50? No, sir. I mean, exchanges might bulk up their reserves at 15.5K, but it's the market itself. It's whoever is bidding on the way down is going to suck up that supply. It's just the supply has to outstrip the demand for each and every level of support or historical area of interest from the prior auctions, the prior closed auctions. And typically, what are you going to do? You're going to look at high time frame to low time frame. Where are the supports? Where historically were people buying? Where were they selling? And there's a lot of levels between now and $15,000. There's a lot, because in most cases where people were prior sellers, they will become buyers. So that's when you're looking left and you're looking at support. You look at 45.5, 47,000, right? So what was this? You've got the close there at 45.5. You've got the close open at 47,000. right? These were prior areas of resistance. Price has passed that. Price has passed those areas prior as well. That's why there's an all-time high above them. Two, in fact. First all-time high, second all-time high. So we know that, yes, these areas were prior resistance before getting back to the all-time high and higher. We also know that it was prior resistance just below here that sent things into a bear market. Those are going to be areas of demand naturally to the downside. Does it mean that price has to go to them? No, because it's all about the live auction right in front of your face. Where's the liquidity? Could there be liquidity down there to be tapped? Meaning, is there buyers down there? Probably. More than likely. That's why I have a big old chart over here of them. And what do? I go high time frame to low time frame, and I typically am just really looking at, because you can just look at the daily yourself, right? And you can look at the candle structure and see where the previous closed auctions came in, where the high of the auction was and where the low of the auction was, otherwise known as your close, open, highs and lows, right? Of your candles. Well, if it drops these lows, that means that we have liquid zones below. It means there's more supply in this area than demand. So it's just going to move towards the order book orders where the demand is. Well, typically you want to just identify where was their previous demand. There was previous supply on these two candles right here around $50,000, right? And it pushed all the way back down to demand, which was the open of this candle from the 12th. That's where the monthly March 2022 bear market swing high was. Found demand there because that was prior resistance, not only in the bear market, but even on the daily here. Now we saw it flipped into a demand zone or support. Price rises until it finds more supply. Comes back down until it finds the demand. If it slips through the demand, it's got to go find more. Simple supply and demand. Now, in this case, it's a live auction of supply and demand on Coinbase's exchange. So you got to understand, it doesn't have to go to these levels. That's why everything's conditional. If it does break down below the lows, 50,000 and a half, probably looking at 50,000, probably looking at 49.5 at the wick low. Probably looking at 49K to 48,340 or 48,240. There's also historical moving averages in here. There's the basis, which is the 20 simple. There's standard deviations of volatility. In this case, first, second, and third that I have here for volatility metrics, which is measuring the volatility of price. And as price volatility moves up, so do these swings in terms of who's willing to, because everybody from the low wants it to go higher, and everybody that's shorting off that high wants it to go lower. So you have higher swings in areas of bid and ask on the books, where the majority were looking to sell higher and the majority are looking to buy lower in that order book spread. And that's the spread. That's the spread of the auction. So doesn't matter who the buyer is, doesn't matter who the seller is. It's all about the live auction right in front of you. And I just don't think that there's no reason to look at $15,500 at minimum until trend changes, because price is trending up, not down. If it's trending down, different conversation. And it's even more important if it was trending down on a higher term time frame. It could trend down on the daily, but I'm not going to be like 15K, 12K, 10K. Not until I saw major trend breaks, major supports fail, and then volatility increasing to the downside from multiple time frames and a higher time frame failure at some of the previously auctioned levels that were demand. Then I would look there. There's no reason to even entertain it right now. So let the Kappas of the world sell all their coins. Let the profit blues sell all their coins. Fine. They're selling them to the ETF players in the game right now, by and large, because they're the ones hoovering up all of their stuff. So, hope that helps. Hope that helps you understand. And please don't get me wrong. I'm not trying to like dunk on you. This is just, it's a narrative thing that's out there that I want to address, that I know that everybody here has seen, heard prior, and probably follow people that adhere to those narratives. And it's about understanding. Where do I think the high will go? Don't know, don't care. It'll probably go past the all-time high and higher. I mean, we can fib it out, and we're getting somewhere in the mid to low $100,000 at minimum. But there's no sense in fibbing it out. I mean, once we see the all-time high break, then it's worth looking at fibs to say, like, okay, top's probably going to be around here. I mean, if you want to fib it out, the easiest way to do it is just go to the monthly. You can do a fib extension off the current move, but because it is a current uptrending move, just take the historical move from high to low and fib it out on log scale. And you can see 1272 is in 103, 1414 is at 130, 1618 to 1786, you're looking at about 173 to around 222, 223. At minimum, I would expect, if the all-time high is broken, to hit a log scale 1272 to 1414 at minimum, unless we are in a different type of a structure longer term, like a more of a consolidation structure on the quarterly, which we won't know until we see that all-time high taken out. But yeah, at minimum, that's what I'm looking for, and we'll revisit that as Bitcoin approaches the all-time highs. It's not there yet. You can fib out the live move as well and see how it lines up, but it's gotta essentially have major fibs falling on current price. But from its current point, if it was to pass the high, we're looking at $72,000 to $74,000 above the all-time high here for the current live move. But this is going to change dramatically as the move continues, and I'd need to see a swing high put in to even have that be valid. And right now on the monthly, there is no swing high, so realistically, we're looking at $100,000 to $130,000 to begin with is a realistic upside price. And then, it could have come in between there. Sure. Could it be lower? Sure. Then it's just we're probably looking at a lower, at a longer form consolidation from something like a quarterly or 6-month chart, if it were to swing just the all-time high and then go into a long form consolidation. But it's likely going to swing the all-time high and find resistance, just so you know. And then everyone will be like, triple top, oh my god. Carrot top, oh my god, did you see him? He's so buff. And anyway. Yeah, so I mean, that's where I stand on that stuff. I don't have a crazy projection for any of you. 500,000 on Bitcoin. That's going to be the price, man. Just look at Marathon. They're going to do Slipstream so that all the big guys can just start processing their 100,000 Bitcoin transactions through there. And then, yeah, man, it's going to drive. Supply is going to become so restricted that even to just transfer one sat across the network, it's going to cause Bitcoin's price to go to $1 million, bro. No, it's just not realistic. It's not how market dynamics work. And in a blue sky breakout like that, the people who are providing liquidity are going to do so in a structured manner. You can tell that institutional investors are involved every way up in the previous bull market. That's why you got a double top. A lot of that has to do with the same market dynamics for the bigger players that were invested in the market. So, but yeah, I don't like this song. This song's annoying. Hold on. It might be because it's like really low in the background. We're gonna chill wave drive. That's the name of the song. So Yeah. Cool. There are a lot of observers of this particular stream right now. Not a lot of talking going on. But I hope that helps, Sim. I hope that answers some of your questions. Hopefully I did a little bit of myth busting there. Even if you don't fully understand what I'm talking about, make it a point to do your research on it. You can even ask AI, as long as it's not... Just don't ask Google AI. Don't ask Gemini, because Gemini is going to give you crazy answers. Maybe man, I got some jokes for that one. Anyway, the liquidity on Bitcoin is not fair. We need to diversify Bitcoin. Oh man. Anyway, 95% of Bitcoin holders are primarily this skin color. So I've created a more diverse group of Bitcoin holders. Like it'd be crazy. How does liquidity work on Bitcoin? It's oppressive. Like, yeah, you're probably not going to get real answers out of them. So you could ask like X has their XAI platform, Grok. You've got ChatGPT, which is actually really good. I know it's heavily censored and people get all butthurt about it, but when you're looking for information like this, it's pretty cool. You can ask it specific questions that you may not have time to ask me, or I might not have time to answer. There's a bunch of free ones, even Bing, Bing Chat. What is Bing Chat's name? Somebody knows it. It's just ChatGPT on the back end. I think it's running 3.5. It might be running 4 now. I don't know. Either way, they also have their own modifications, customizations to it. But, you can ask it any kind of questions that you have regarding some of the things that we talked about. And it'll probably give you answers that you may or may not understand, but worth bringing up if you do your research on it. It can help you aggregate your research so that you can better understand some of the concepts that you might have questions about. Funny thing, go to one of them. I don't know what Bing AI's name is. Maybe it's Bing. It's Copilot, or it was Copilot. I don't freaking know. They're integrating it into all their software. Either way, I had some other people chatting here, but hey, you could go and ask it the same thing you asked me. It's probably going to give you a crazy answer. But if you ask it more specifically, like, why Carrot Top? Triple top, Carrot Top, it rhymed? I don't know. How you doing, Jedi? But yeah. So in essence, why can't it hit $15,500? From here, it'd be trend, support, and resistance, volatility, and momentum. That's my reasoning for why it can't. If those things change, then there's no reason why it couldn't, but they would have to change. And so far, they have not changed. So it's up and to the right. By the way, my son is doing fine, thank you. He's doing good. He's in school. Because I hope he's in school. Yes, he is. He's still in school. Because otherwise, I'd be sitting here talking to you, and I could be over there hanging with him. No, I'm just kidding. I enjoy hanging out with you guys, and I enjoy your willingness to listen to my bullshit. There's some good information in there occasionally, right? Landy, when camera? Never, probably. Why not? Well, one, because you, sir, know me personally, so you know why. The other thing is to be mysterious. No, honestly, I don't want people to know who I am. I don't want to dox myself. I mean, if you really did your research, you could figure out who I am. It's not that hard. But like, why volunteer it? There's no reason. Like, who cares? I'm a random dude with a stupid NFT bull or bear or whatever he's supposed to be. I think he's a bull Muppet thing with 3D glasses, horns, and a doctor's listening device from like the 50s. And his mouth sewn shut, because that's what you need to do to shut me up, is sew my mouth shut. Like, realistically, if you're listening to me, why the fuck are you listening to me? You're crazy. Yeah, occasionally I call the price levels right, huh? No, we've been incredibly accurate as a group when it comes to this stuff, and that's one of the reasons why I share this information, is because a high degree of accuracy in identifying areas of interest, which again are areas of liquidity, are the main reason why I wanted to bring this out to a wider audience, because I really got irritated by what I was seeing in terms of these trading gurus, because they're complete 99.9% of the trading gurus are complete and utter trash, like abject garbage. They don't know shit about shit. They could not trade their way out of their own ass. They could not trade their they could not trade their head out of their own ass, because no one would take it. They smell like shit. But either way, like, there's good technical analysis people and good technical analysis educators out there. I've named quite a few. I do consider myself fairly adept. There's guys like MDX Crypto, which I love that he goes after some of these freaking nutcases. You've got your Eric Crowns, you've got your Pizzinos, you've got guys like Credible Crypto on Twitter, Rickus. There's plenty of others. Like, I'm not going to name them all, but you know, you have to have filters for this stuff. Like, you gotta be able to identify who's good and who actually knows their shit and who's full of shit. The guys like Capo and Profit Blue were able to fool people in bull markets, but you know, obviously exposing themselves to be abject amateurs who likely got lucky with their trades, because they have no ability to switch their bias. They don't have conditions that they stick to in terms of their identifying their conditions. So invalidations of certain theories, they just move the target because it doesn't fit the narrative that they've built around their personality. And I think that understanding that people like that exist, they might look like they know what they're doing. They might even have sound theory behind some of what they're doing, and may have even been right for an extended period of time, but they expose the fact that they're not a practiced or real trader. They're an amateur who's LARPing and wouldn't survive a fucking day in a prop shop. For real, they wouldn't. Like 99.9% of them. Even some of the guys that actually know how to do this shit, a lot of them wouldn't survive in a prop shop either. And shit, I wouldn't. I'd be fucking failing RM all the time, getting calls and getting my portfolio taken away. Why did you put all the money on that? Why are you selling covered calls on just the one? I don't know, man. I got obsessed with it. Stop ODTing NVIDIA, you asshole. Actually, I would not be doing that. One, that fails every risk management practice, but retail does it, and it's, whew. But yeah, Leroy says F in the chat for that last statement. I don't know which last statement that was. I've been just rambling at this point. So, chill stream. I see a lot of you still hanging out, listening. to the nonsense, and I appreciate that. I hope that you found some of this stream informative, even that being the technical analysis portion and the Marathon Digital portion. And to kind of wrap my thoughts on that, I don't see a problem with the Slipstream stuff. They have the hash power, they own the machines, they have a company and investors to satisfy. The guy that built this is willing to open debate it. They could have done this without telling anyone, but the fact is they're offering it to the public. Yes, is it a way to generate more income via transactions? Absolutely. They have said as much. Is this something that cannot be done by anyone else? Absolutely not. This will be copied. Look, they had unused internal mempool space. Like, you might as well use it and make money, right? I get it. And they have the ability to not have to, lose nodes, right? Because they run their pool. It's not like joining another public pool where you implement a template change on that pool and you're likely to have a lot of miners leave because they just won't implement it, so they'll be knocked out of the pool anyway. So they don't have to worry about that. And look, does it lead to more centralization and this and that? Well, it's as with anything in Bitcoin, it's going to balance itself out. You're going to see others do the same. You'll have periods of more centralized mining and hashing power and people sending things to, internal mempools. And that's a natural progression. And then you're going to see it swing the other way. You see others start to fire that up, and then everything flow back out and templates being readjusted so that it could be more open market, so the fee structure is more shared. We're not taking in 1.5 because they're going to do 1.5, the high priority fee, to process anything you send to them, right? So, I mean, you get a big pool that's saying like, I'll do 1.25, the high priority fee, and we can mine an internal mempool and then broadcast later. Like, fine, bring it on. That's great. And this is only going to become more prevalent. I mean, you've got companies like MicroStrategy that are now Bitcoin development companies. Who do you think is going to use this kind of stuff to test shit out? Like, they're going to run their test nets and they're going to do cool stuff. They're going to publicize it. And then they're probably going to send stuff to pools like this so that they can be legit. Bring them off testnet, roll it out, test it out with these guys, let them mine it on the internal mempool, and then let them broadcast it. That way it's not screwing up the regular public mempool. Let them handle it and pay, and you will pay for it. That's all. And there will be competition in that space. If you think there's not going to be competition, you're fooling yourself. Is there a way to find your BTC? Yeah. What do you mean find your BTC? It's in your wallet. I mean, theoretically, if I dug into your account and your email and then did a search of all of the different places in which your email could be registered, I could probably find a centralized exchange. I could do a wallet scan for ins and outs in and around that exchange in terms of wallet addresses. There's always ways to find someone. I mean, this is a public ledger. It's an open ledger. You can find somebody. It's just a matter of attributing transactions to wallets that they own. You KYC with an exchange, it's going to be it's going to be easy to find. If you're on a non-KYC exchange, I'm not going to find you. But if you've ever bought Bitcoin where you've had to KYC with an email, real name, photo ID, or any of that stuff, I can find your wallet easily. I mean, the email was likely, if this was a long time ago, I mean, he had private keys. That's the wallet portion. You have your private key. You have the wallet. Doesn't matter if it was in an email. It doesn't matter if it's written on a piece of paper or it's just inside your head. You have the wallet if you have that information. You have your recovery seed phrase that creates the hash for the private key. You have one of the two. You have the wallet. So if you have your recovery seed or your recovery seed phrase, you have that. It can be emailed to somebody. I mean, I wouldn't do that. That's crazy. You're literally transmitting publicly. I mean, emails can be read very easily moving over the internet. So that's a silly way to do that, but somebody sending keys that way is not unheard of. It's not like attributed to your email address. So all right, so I think that's going to do it for today. Over here. Yeah. And if you are interested in understanding the perspective of the creator or the brainchild behind Slipstream and the reason why he brought this to Marathon as a contractor. So he doesn't work directly for them, but he is paid by them. He's contracting for them. It's Portland.Hodl is the gentleman who essentially created it. Or no, I'm sorry. You can just search it under Portland Hodl, HODL, Portland Hodl, and he's contributed to Bitcoin Core and other stuff. So he is respected. Obviously, he is open to criticism and argument, and he has been for quite some time. So don't hate what he's doing, that's for sure. And yes, to answer your question, I do mine. Hosted mining, yes, because I got locked in at like unbelievably low power rate. Yeah, if I said it, there's people who would probably call bullshit. But yes, unbelievably low power rate is what I got locked in at. I mean, you're looking at like at like 4 cents at cost for a lot of places, and they're charging at 8 to 10 cents, especially for people who don't know how to negotiate and or just trying to run like one, which is there's no point. I'm from back when power negotiations were even much lower, and I've rolled those contracts and preserved my power rate. So for the hosted stuff, I can go even through this halving, and I'm making money, and a substantial amount at that. Yes, absurdly low. And for home mining, I run it off we have solar, so, and then run the miners off solar. I'll be adding to that as well. So that's solo mining, and I have some miners joined to pools. So yes, I'm familiar with managing the miners themselves and all that kind of stuff. Am I an expert? No, absolutely not. But I have experience, and I am actively involved in that side of things as well. So yeah. That's going to do it for me today. I'm going to go get some lunch. It is a little after 1 o'clock here on the west coast of the United States. So I want to thank you for joining me. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And I will leave the stream going if you want to revisit some of what we talked about and listen to some beats here coming into the last 10 minutes or so is what I will have this running for here. Let me see. That's set up. Yeah. Oh no, programs are crashing. What did I do? It's just not a very well written program. That's all. We do we'll give it about 10 minutes. Oh, I'm making lots of noises, Windows noises in everybody's ears here. All right. Yes, and you guys are welcome. I appreciate you guys for hanging out and listening to me. And I really do hope that you found, at least if you didn't find the last part where I was explaining things from my perspective and maybe killing a few narratives along the way. I hope that you did enjoy and found some usefulness in the TA portion and then of course the Slipstream portion, so you understand kind of what's going on there. I will revisit it as things develop, especially on Monday. I want to check it out myself and see how it goes. But you have a wonderful weekend as well. And yeah, I'll see you on the other side. Landy out.
The Army Air Forces has announced that a flying disc has been found and is now in the possession of the Army.